SOFI currently is a source of frustration for a lot of investors, and it makes perfect sense. After playing the yo-yo dance of going basically from 4 to 8, back down to 4, back up to 8, back and forth all year last year, all signs are pointing towards SOFI really breaking out, clicking on all cylinders, and turning that profitability knob here in the fourth quarter, which is right around the corner. But yet here we are seeing SOFI finally break out of that $4 to $8 range, just to fall right back into that range again after a huge run. So I agree, it's frustrating, but there are 4 facts about SOFI that everybody seems to miss in the first place, or they forget about them in the first place. That happens every time we see a great run up, and then whenever it kind of seems to crash back down. And make sure you check out the pinned comment to see the new channel there where we talk about retirement, finance, entrepreneurship, building wealth, all kinds of things like that outside of stocks. We do that right there on the channel. So make sure you check out the pinned comment down there for that channel. So the first fact that everybody misses about SOFI is that the stock price movement is actually normal. It's not unusual. Look guys, this is a high growth stock at the beginning of its growth journey. It's not a mature growth company, definitely not a mature legacy style company. It's right here at the very beginning. So it's very common for these stocks to run up and run back down. And honestly, I can make a good case for this actually being a speculative stock because they haven't turned a profit yet. I agree they're on the path. I think they're going to get there 1000%. But the point being, this is very, very normal for a high growth stock at the very beginning of the growth stage. Stocks in that category have always, and probably will always, move up and down wildly, sometimes based on absolutely nothing, sometimes based on a rumor, sometimes based on a short seller report, sometimes it's just, I don't know, it's Tuesday and Wall Street, traders are just looking for something to trade. So SOFI is going to be the stock that they absolutely whip that week, or month, or for the year in some cases. The point I'm trying to make here is it's not unusual to see hype runs up to where it goes way over value, and then also see crashes down to where it goes down to significantly undervalued, even if they're performing every quarter, even if every quarter after quarter after quarter after quarter is just good on top of great, on top of great, on top of excellent. Just keep in mind, this type of movement for a stock like SOFI that is in the early stages of its growth category is perfectly normal. There is nothing unusual going on. There is no crazy Wall Streets against SOFI or anything else like that going on. This is just normal market mechanics for a type of stock that SOFI is. So the second fact that everybody misses, or in this case, probably just chooses to forget, is that SOFI is not profitable yet. Look guys, I agree. I think they're going to get there. There's no question in my mind. They're executing on a very high level. That management team is rolling. Everything is going in the right direction. But in the past, there have been stocks that have been in the same exact category, been on the same exact growth journey, been on the same exact track, and then got derailed before they ever hit profitability. So most on Wall Street are still going to treat it as another bad stock that's out there that's not going anywhere. It gets thrown more into that speculative category, whether we like it or not. That's the reality of the market. You're not guaranteed to be profitable until you're actually profitable. And then being profitable doesn't mean Wall Street's necessarily going to get you completely out of the doghouse in regards to trading you up and down. And let's look no further than one of our other favorites on this channel, Palantir. When they turned the profitability knob, it had a huge run up afterwards. But guess what? It cratered right back down to $7 once again, which was crazy. They turned a profit. They're profitable now. Alex said they were going to be profitable basically, for the foreseeable future. And yet Wall Street gave it its nice run up, but then beat it right back down to right where it was whenever they were struggling, when they were having some issues and they weren't doing as well as they did that quarter. They still beat them back down. And it took that second quarter to finally push Palantir up out of that, over $10 range to stay over $10 and to kind of make that next leg up in regards to, okay, now they are profitable, and to not see the swings be as wild. But SOFI isn't there yet. They've not even shown the first quarter of profitability, much less kind of seeing how Wall Street takes it and, basically see where the stock movement's going to go from there. And I wouldn't be surprised if we see a nice run up if they, when they have the first turn of profitability, and then Wall Street beats it right down to the, $6, $7, $8 range, whatever the heck they choose to do. Wouldn't surprise me at all, because it's one of those things that takes multiple quarters of proving it in order for Wall Street to kind of start jumping on board more and more and more and bring in that more stable, share-based holder in regards to that stock, in regards to what they're doing. So for me, don't be surprised, because SOFI is not profitable yet, to continue to see that sort of choppy thing into the future there. Even if they turn profitability, don't expect it to immediately just go to the moon the next day and Wall Street's never going to trade it down again or anything else like that. Nothing can be further from the truth, and we all have to acknowledge they're not consistently profitable yet, so that's something you have to understand. Basically, if they did what they did to Palantir right there at the beginning of all the AI craze and all the other craziness that was doing that, what the heck do you think they're going to do to SOFI when they're fintech, and fintech's in the doghouse, which leads me perfectly into number 3, which is fintech is in the doghouse with no sign of getting out anytime soon. Look guys, it doesn't matter how much better SOFI executes than everybody else in fintech. It doesn't matter what they do for right now. Sometimes sectors just fall out of favor with investors in general. At that stage, it doesn't matter. SOFI is going to get beat down just like all the rest of fintech, and it's not going to get itself out of the doghouse regardless. We can say it's fair, unfair, doesn't matter at this stage. That's exactly, that's exactly how Wall Street trades. If, energy sector is down, doesn't matter what anybody else is doing. Doesn't matter if they're hitting record profits or anything else like that. You're still going to see the energy sector overall trade down, and you're not going to see those stocks get that credit for it. But remember, as a long-term buy and hold investor, that is the exact situation you want to have happen. What that means is in the short term, your stock price gets beaten down because, fintech's out of favor, but underneath the company is performing and performing and performing and pushing the long-term valuation higher and higher and higher, meaning that you're getting a significant discount compared to the performance of the stock. And you may get 6 months, you may get a year, you may get 2 years, you may get 2 weeks. Who knows how long fintech will stay in the doghouse? But the point being, you will get some amount of time to add shares on the cheap where the actual valuation is here, but Wall Street's beating it down to here, not because of their performance, not because of what they're doing, not because of their future, but because, well, fintech's in the doghouse, and so we're not going to buy fintech right now. We're going to sell it off instead. And that's exactly what happens. But as a long-term buy and hold investor, that means I get 6 months, 8 months, a year, 2 years to add those prices, add stock like a SOFI at incredible prices, because trust me, sooner or later, fintech will get out of the doghouse. And if it's significantly undervalued, guess what's going to happen? It's going to rocket ship itself back up. We saw it with Meta last year, right? I mean, it was just beaten down, beaten down, beaten down, beaten down. All of big tech was beaten down, but it took the biggest disproportionate beat down. And then all of a sudden, magically, it's a 5x stock. Here we are just a year later. And that's Meta. That's a large mega cap type company. We're talking about a high growth company in terms of SOFI. So that run up, depending upon how long this fintech doghouse thing lasts and how well SOFI performs underneath, could actually be a bigger ramp than what Meta got. So even though fintech's in the doghouse right now, it doesn't mean it's not advantageous to you as a shareholder building out your position and being able to add more shares on the cheap when maybe you shouldn't be because the company's performing excellently underneath. And last but not least, an economic slowdown will hurt SOFI's growth rates. Now, how much of a slowdown it's going to happen, it's all to be determined, guys. Nobody knows. I hear everything from Great Depression 2.0 to, basically a soft landing altogether. Who knows at this stage? I'm not here to guess that sort of stuff. But what I am here to say is that higher rates are going to create slowdown in terms of consumer build, which means it's going to slow SOFI down. Now, that doesn't mean that it's going to have no growth or negative growth. Absolutely not. I think they're going to still have incredible growth rates, but they're not going to be as good as they would if the rates were a little bit lower. If the Fed funds rate was at 2.5 versus where it's at right now, up over 5. If it was at 2.5, SOFI's growth rates would accelerate a lot faster. So you have to understand that fact and understand that you're not going to see the kind of growth we will see whenever, the Fed finally decides to let their foot off the gas a little bit and allow interest rates to finally fall back down. Again, that is advantageous to you as a long-term buy and hold investor because it's just another thing where they can continue to perform underneath, continue to grow, but not hit these crazy growth rates, and then be able to continue the same growth trajectory, maybe even a better growth trajectory as the Fed continues to lower those rates. So again, long-term, it's your benefit to see this sort of a slowdown right now happening in regards to SOFI. And if you want to learn how to do evaluation, how to do price targets, if you want to see all my buy and sell alerts in real time to include SOFI stock, if you want to take 5 courses for free, use our free stock analyzer tool, be a part of the best 6, 7, and 8-figure Discord out there, jump into my DMs. You can absolutely jump on our live Q&As and ask me any questions you want. We got all sorts of events going on for group members and a whole lot more. Make sure you check out the pinned comment down there and see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market, and click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.